All right. So thank you everyone for joining the event today. So my name is Khun Peng. I'm the Vice President of Stanford Blockchain Club and also the founding director of Stanford Blockchain Accelerator Program. So trying to incubate Stanford startups in a more kind of crypto native way. And today it's our pleasure to have Paul with us, a partner at Pantera Capital. So Paul, do you just want to go ahead and give an intro?
Yeah, thank you so much for having me, guys. Intro on Pantera Capital. Pantera Capital was founded by Dan Moorhead. He used to be the CFO and head of global macro trading at Tiger Management. And Tiger Management used to be one of the top hedge funds in the world. And in 2003, Dan actually started Pantera as a global macro hedge fund. But then starting in 2013, refocused to looking at just cryptocurrencies and blockchain. So what does that mean? That means Pantera started the first institutional hedge fund for Bitcoin, basically allowing people to invest into Bitcoin through Pantera when the price of Bitcoin was only $40. So the return of that fund is, 80,000% or something like that. And then Dan started angel investing into some cryptocurrency companies. I joined in early 2014. I spent my career, I graduated from UC Berkeley. So, obviously, hopefully we can still be friends. But outside of that, started off my career doing economic consulting and then did some business development for some early stage startups. And then for the last decade or so, have been in venture capital. My last fund was looking at mobile apps and mobile infrastructure. And then for the last 7.5 years, I joined Pantera in early 2014. You can imagine sort of no one really looking at the space at the time. I felt like, after doing some reading on Bitcoin and cryptocurrencies, I felt like there was something here. And, coincidentally, Pantera was looking for someone to do venture capital for them. So I joined, and since early 2014 have been spearheading our early stage investing in projects in this space. So that meant from 2014 to 2017, basically like looking at CeFi companies, and then from 2017 onwards, getting more into early stage token projects, et cetera. So I focus really on investing into anything that's early stage, whether it's equity, whether it's tokens, and, built up a pretty big team around us. We have about 60 or so people. And what's different about our fund versus other funds out there is not only do we have investment professionals, but we actually have a platform team. So we have a team that focuses just on helping portfolio companies. That means a person that helps with recruiting, a person that helps with regulations, a person that helps with marketing, security auditing, basically like almost like your first hire at your startup company, focusing on each of those different things. We have a person that kind of creates scalable value add on each of those different categories. And of course, we have a lot of scale too. So we manage about $7 billion. And I think for us right now, we're multi-stage, everything from the first check-in all the way until hopefully you do your ICO or your public token launch, or you go IPO. We can go all the way throughout. And I think what's unique about us is really just our team, Dan's institutional background, my venture capital background, Joey's technical background, sort of founding Augur, and then also really just the intersection of Wall Street, finance, technology, and also venture capital startups. So yeah, we're really excited to be here. We funded quite a few companies from Stanford. One of my favorite companies is Audius. They, O'Neill was a Stanford grad, and he also was an investor with me, and he started Audius. And I'd say that company stands out, but also, I don't know if you guys know Alchemy. I'm on the board of Alchemy. So led the Series A. Those guys are super aggressive in terms of tapping into the Stanford community. And so, those two really do stand out for us in our portfolio.
Yeah, thank you, Paul, for the intro. Actually, we just hosted a talk with Alchemy a couple of weeks ago.
Oh, that's great. Those guys are amazing, right?
Yeah, definitely. They're great. Yeah, so Thank you for the intro. So what we'll do now is like, we have a list of questions that we collected and we prepared. We'll go down the list. And also anyone from the audience, like if you need questions, anything that Paul mentioned, feel free to throw your question to the chat. And also after we put in the floor for questions, you can just either ask a question in the chat, or you can just raise your hand and unmute yourself, ask a live question there. All right. So the first question I have is, since you guys at Pantera Capital started really early, like 2013, right? I think that time there's a lot of doubts about Bitcoin.
Yeah.
Seems like a lot of people think it's like scam. So what's like your Pantera's belief or early thoughts in 2013? And you joined very early as well, 2014. And what's your thoughts at that time? And how did that evolve? Like along with like the technology as it mature, how did it change or evolve?
Yeah, that's a great question. I mean, when I joined this space, it was really Bitcoin and the fact that there was a decentralized currency that couldn't be manipulated by the government, and hearing some of the use cases, you know, especially in emerging markets like Argentina, where entrepreneurs that Pantera had invested into could see the value of their currency go down to zero 3 times in their lifetime. And, you know, they just knew that, you know, they couldn't trust the government, they couldn't trust the currency. There needed to be something else for them to really put their value into. And from a store of value perspective, knowing that, you know, there were some similarities that Bitcoin had to gold, and the fact that, you know, there's a fixed supply, and you know, I think that, in addition to just the fact that not only did it have similar properties as gold, but, you know, there can actually be utility to it, really for us made it seem like Bitcoin could actually derive quite a bit of value. And then of course, I think for us, knowing that if Bitcoin was going to be a store of value, then eventually it could be used for things like payments, whether it was sort of e-commerce payments or whether it was cross-border payments. And so just those two use cases felt like it was a sort of a tremendous market to disrupt. And thus, like when I was looking at Bitcoin, I thought that there was just a lot of promise just for those two things. And so when I joined Pantera, Dan was thinking the same thing. He felt like this was a great way to store wealth. And, you know, there were some use cases around cross-border payments, especially. And so the first thing that we started out to do at Pantera was to really invest into companies that were going to support and bring use cases and access to Bitcoin. And so it's similar to now, if you invested into Ethereum or if you invested into Polkadot or any of these new cryptocurrencies, you know, if you really want to see that cryptocurrency increase in value, you have to be investing into companies that are building tools or infrastructure or ways to use that cryptocurrency. And so that's kind of what we did from the early beginning. We figured, well, if more and more, you know, obviously with Bitcoin, like, you know, when there's more demand than supply, then the price goes up. So what is going to really drive demand? Well, you have to make it easy for people to actually get it. You have to make it easy for people to transfer fiat to Bitcoin and be able to store it and be able to feel secure. So that's why we started investing into things around security and custody and exchanges. So guys like Coinbase and Bitstamp and Zappo really early on. And then, of course, there were some early use cases around payments. And whether that was on the consumer side or whether that was on the business to business side, we started to explore different companies like Abra, which is still around, or Veeam, which is still around on business to business payments. I think the one thing that we really noticed was that it was going to take a long time for people to really have cryptocurrency in their possession and then transact with it. So, the initial use cases were where either, people didn't really need to know anything about cryptocurrency. All they needed to know was that you can send money across borders faster, cheaper, and more transparent. And then, of course, if people were willing to spend cryptocurrency to buy things, then there were companies back then like BitPay that were going to allow that. But we quickly saw that people really didn't want to spend crypto. They really just wanted to hodl, just like my hat. So it was, the payments use case for e-commerce didn't make as much sense versus really just kind of using it for FX, and where there wouldn't be too much volatility exposure. Now, I think over time, we started to see the cross-border payments use case thrive, but other use cases such as, e-commerce payments, or such as, ripping out the banking system and putting, invoices on the blockchain, putting land titles on the blockchain, putting all these different things you can put on the blockchain, data on the blockchain, et cetera. When you're focusing on things like enterprise use cases or institutional use cases, it was just way too early. And so I think the big shift that we saw outside of just hodling and payments really came in 2017, where, we started to see Ethereum evolve and people could really start issuing tokens and then being able to sell pretty much a piece of your project to users, and then be able to start disrupting business models around marketplaces and, now enabling sort of the creator economy. So I'd say that was the big shift, really, from just hodling and payments to something more. Really started around 2017, where you can actually get the community involved. And when you get the community involved, then it opens up more avenues for, more use cases where you can remove the intermediary.
Great, thank you for the answer. It's very interesting to see how you guys kind of the thought evolved since like 13, 14 to like 17, and then to later. So another question is kind of related, since like you guys got in so early, so you've been through like a several like market cycle. So it's kind of two questions. First is like, how did your investment strategy change to accommodate the different market cycle since 2013 or 14? Another thing is, another question is, what do you feel a sense, if you feel a sense there's a difference we start to see about this market cycle, start to behave a little bit differently than before?
Yeah, those are great questions. And I guess just to give you guys a sense of how we're sort of managing our funds to optimize for these different cycles. So when we started in 2013, the only thing that you can be investing into was Bitcoin. So we offered a Bitcoin fund. And then you can start investing into companies. So then we offered a VC fund that was investing into just equity. And then starting in 2017, or starting in 2015, we started to see some token projects start being built, like things like Augur. And then Ethereum got more traction. And then we started to see people raising capital just to invest into early stage projects issuing tokens. And so we launched an early stage token fund, one that was, I think, the first of its kind, where it wasn't bundled with a VC fund that was investing into equity. It was sort of a high octane, all we're doing is pre-sales. And when we get out of pre-sales, like, eventually if we sell some of our position, we go back into pre-sales. It was a pre-sale only fund. And we were just moving quickly because we knew that like investors are still learning about like this new asset class around tokens, and mixing could kind of, be not a great thing for existing investors that weren't so comfortable, and we got to move really quickly. And then of course, once we started seeing a ton of tokens be launched out there, hundreds of and thousands of tokens, then we started launching a active trading fund because we knew that there was an ability to sift through the noise and pick, what we think are going to be, good companies in the short and medium term projects, and then be able to, get into these liquid positions, either using a ton of data that was evolving, or whether it was basically using our knowledge of these companies that are still fairly early stage, and even getting some good deals by investing to these, liquid token projects over the counter. And so we continue to evolve with the different types of assets that emerge in the space. And now our recent fund is a VC fund that is a long 10-year fund, but it's investing into all of those different strategies together. So I think that's kind of where things are going, where institutional investors are thinking, well, you guys have a lot of experience managing across different cycles, and we're not quite sure which strategy is the best strategy. We actually think that all of these three strategies make a lot of sense. So we want you guys to manage across these three strategies of early stage equity, early stage tokens, and liquid trading, and you guys decide how much of each you should be doing across all these different cycles in a longer term fund. And so I think that's where everything is shifting, where, people are now having options in terms of how to invest in the space. And, the way that we saw it starting in 2013, it was just Bitcoin, then it was venture capital. And then in 2017, just how it's similar to right now, we hit a bull market for tokens. And the best time to be investing is at the beginning of the bull market, because the valuations for private companies, at least on the private side, haven't really adjusted yet. So as you get into private companies at the start of the bull market, then as they start launching their token and it hits the top of the bull market, then you're in a really good position. Once you start getting towards the peak of the bull market, then you probably want to be a lot more selective in terms of your private investments. And then I think with liquid tokens, I think it really just depends on, just because that adjusts more fluidly. I think for liquid tokens, you really kind of look a little bit more at the data, and you look a little bit more at like what's going on with each of these different projects. But on the private side of things, as we are feeling like we are getting towards the top of the bull market, like right now, we are being very, very selective with projects that we invest into, and looking at valuations a bit more closely, and trying to understand what use cases will actually do better as you go into a bear market, and which companies have valuations and upsides, and everything else that will kind of sustain themselves through a bear market. And of course, now that you have a multi-strategy fund, you have the option of basically deploying more into liquids and seeing if these private companies will outperform your liquid tokens as you go into a bear market. So that's kind of how we're thinking about things right now. We feel like we're pretty well into a bull market, so being very selective on the private investment side, while still putting in capital into cryptocurrencies that we think still have quite a bit of value in the short and medium term. And then when the bear market hits, we're probably going to buy more on the liquid side and wait a little bit for valuations on the private side to reset. And then we're probably going to pour really hard into the private markets, and hopefully do that all the way up until the next bull market hits. So that's the strategy that we've seen and that we're going to employ. I think the difference between the last bull market and this bull market is the fact that we're seeing a lot more institutional capital come into this space. And it's kind of reflected in our fund too, where our last fund, we had 25% of our fund institutional capital and 75% of our fund retail capital. And now it's flipped the other way around, where 75% of our fund is institutional capital and 25% of our fund is retail capital. So I really do think that the projects are much better. There's less like scammy projects due to regulations and due to the fact that it's not open to retail investors in terms of crowdfunding. Most deals right now are happening in the private side of things with select public sales going through platforms like CoinList and Republic that kind of filter through the audience to have them up to a certain education level before they participate. And then also, I mean, there's still retail investors coming in, but I think there's just a lot more percentage of institutional capital that are coming in right now that we're seeing in our funds and outside of it, and that are waiting to come in through the sidelines. I really do think that, capital as a whole is really coming in a large way because of the opening up of PayPal and Robinhood and all these other platforms that are making it easier for retail investors to come in. But it's still sort of a smaller percentage compared to what was happening in the past. So when there is going to be a pullback, I think there's just more permanent capital to actually give price support to at least the larger cap tokens and the ones that are more promising, like altcoins.
Yeah, thank you, Paul, for the insight. And actually, question, like kind of you mentioned a lot of institutional capital getting in like this bull market. So what's your view of like right now kind of seems like a large inflow of money and interest in the crypto market, and some like the no crypto or traditionally no crypto VC get into the crypto VC world. How will that kind of change the VC landscape in the crypto industry?
Yeah, I mean, I do think that, or I know that there are a lot of VCs, traditional VCs that are coming in. I think I saw somewhere, I think it's public, but I read somewhere that a good chunk, maybe up to half of Sequoia's recent deals have been all in crypto companies. So it's becoming very, very popular. I know traditional VCs are starting to have members of their team focus more than 50% of their time in crypto. I know they're thinking about launching separate crypto funds. I know that the general, like a larger team, are having sort of weekly calls to talk about crypto. And I think one of the things that I've heard from some of the traditional VCs is all the crypto investments that we've done in the past have done very well. We regret not doing more crypto investments. And so what does that mean for us, and what does it mean for the industry? I think it's great for the industry. I think it really shows that, more than just like making money, I think what's drawing VCs to be investing to the space is they're seeing some of the best talent within their networks starting cryptocurrency companies. And they're really seeing, some use cases that are starting to take off, and they can really see like a thesis around some of the areas that they should be investing into. And so I think that's great because that just shows that they see a lot of opportunities out there to be investing in. Now, what does that mean for us? I think that does mean that it's going to be a lot more competitive for deals, especially as their networks have been sort of longer built, right? These traditional VCs have been around for decades, and they built a great brand, and they built a great sort of, portfolio base and followers. And so a lot of the deals will come from the network. And I think on top of that, we're starting to see existing companies within their portfolio even thinking about tokenizing. So companies that are already within, like, so deep in their network where they basically will have a first shot at investing into these companies. And so our strategy there, what we've seen is that whether it's their existing companies that are thinking about tokenizing, or whether they're seeing folks within their network come to them with a cryptocurrency company, is that a lot of these entrepreneurs are really seeing that there's a big difference between, the value add that you can provide as a crypto investor for a crypto company versus, right now where it stands, traditional VCs and their value add to cryptocurrency companies, everything from recruiting to everything about like security auditing to governance to providing liquidity to building community to tokenomics, regulations. All these different things are different for crypto. So what we're starting to see is traditional VCs partnering with other crypto firms, whether it's a co-lead scenario or whether it's something that is a lot more substantive than what they're normally used to when they take, 90% of the round and they leave, 10% for angels and no other VCs get in, is that we're seeing a lot more participation from crypto VCs with these traditional VCs, or even the fact that like some of these earlier rounds, they're actually not even choosing the traditional VCs because they feel that these traditional VCs are probably going to be a bit more flexible in terms of how they come into these companies. And therefore, they actually want crypto VCs earlier within their company versus the traditional VCs. So I think we've been able to compete very well against the traditional VCs, at least right now as it stands, because of the value add that we provide. I think things can be different though over time. I think a lot of these traditional VCs probably have to really go all in and start crypto specific funds and have the flexibility to do some of the things that other crypto VCs can do around trading and liquidity mining, staking, etc. Or else you're just gonna, kind of fall behind.
Yeah, thank you for the answer. Make a lot of sense. I think now I want to kind of switch gear a little bit into more kind of like startup. I know now it's like kind of there are two kind of popular way of raising money for startup. One's like round, one's like equity round. So what's your view of like choosing either or as a startup? And also another question I have is, seems like there's that the equity round has been out there for a while, like even the no crypto VC, I think has certain methodology to value startups based on the equity in different stages. And how about the token? Is there like any way how to value a company based on their token for their token round?
Yeah, that's a great question. Number one, if you guys are raising capital, come to Pantera. We're awesome. We're friendly. We like to see you guys early. But outside of that, I mean, I think right now, like in 2017, it was just a free for all. It was raising tokens and launching really quickly. There was no regulations on exchanges, and so you can get listed, you can get liquidity. It was an easy opportunity for investors to do quick flips, and it was just craziness in terms of the amount of capital that was willing to come into these projects, and there was no real need or thought to even like include equity because entrepreneurs can basically raise non-dilutive capital. I mean, why would you not like raise non-dilutive capital? It's like a no-brainer, right? Well, bull market did not last forever. And, when the bear market came, a lot of the leverage went back to investors. And, I think for good in the fact that, investors were now starting to put terms in there that really just gave them more protection, because we started to see like things happen where, projects never launched tokens, projects ran away with things, or all this kind of stuff that like normally if something happens, like you need to be protected. And so, what happened after that was really term sheets that at least looked like SAFs, but just gave a lot more protection around, if the company didn't launch, if the company got sold. I mean, like if the company got sold back in the day, like it really didn't include anything for, investors really, because you didn't own equity, you know what I mean? So it's like, it's one of those things where like, even just, that simple clause, was such a big deal for sort of, an acquisition. And then beyond that, like we started to see basically some of these token projects not really come to fruition. And then they kind of went back and started to do a business that involved revenue and fiat. And so, then what happens, right? Then like investors are like, what is the investment into a token really turn into? And so we started to see formats where it would be a SAFT, but it can convert over to equity based off of like some shareholder vote or something like that. And so that became an option. But at the end of the day, I mean, what equity really provides, as you know, is long-term alignment. You're investing, you're owning a piece of the company, and you're with the company sort of like knee deep and throughout. And so we started to see term sheets where you are investing in the equity of the company, and you could either also participate and get tokens for that same amount of capital, or you would have a right to participate in a token round with some extra benefits as a shareholder or things like that. Or it would convert over into a sort of a pro rata situation. So I guess basically, if you take away the right to invest further capital and get more tokens, then the structure sort of looks like you own a percentage of the company, and the company will own a percentage of the token cap table, and therefore, you will directly get exposure to whatever portion of the company, and then that company has a portion of the cap table. So you basically get a slice directly, and you actually get those tokens delivered instead of just having indirect exposure by holding the equity. And that became very, very popular. And the other strategy is basically to actually set a price for the token. But I think if you're investing early on in a company, I guess if they haven't even thought about a token yet, it's hard to really sort of price what the token network should be at that time. So I think what we're seeing right now is that sort of structure where companies do want long-term alignment, and they know that there might be some value in the equity. If it's early enough, they're probably going to raise an equity round and give some sort of pro rata right exposure for the investor. But I guess if there is a company that really does feel like they should be, raising a token round, and pretty much like most of the value, all the value is going to be in the token, then they might actually set the token price right then and there. And then when you invest, you'll actually know what percentage of the equity you're going to have, and then also what percentage of the token cap table you're going to have.
Yeah. Thank you for answering that question. So I will ask one more question and then open the floor for live questions. So if you have any question, feel free to throw the question to the chat. So the last question I have is, so this is part of the kind of education series for the accelerator program that we're going to start next year, early next year for the winter quarter. So like for students who are actually looking for ideas to work on, based on your industry experience, since you're kind of in the frontier of the crypto innovation, what do you think like will be the next frontier or interesting idea to work on that might kind of explode or in like 2-3 months or 6 months period?
Yeah, that's a good question. I mean, I'd say, one interesting thing that you could explore would be the fact that, it really depends on your background, but, as you can imagine, technology and crypto is global. And I would say the US and, certain parts of the world have a bit more knowledge and education and traction in terms of, speculation and usage of crypto. But there are many parts of the world that are still getting educated on crypto. So I'd say Latin America is one that, we've invested into the Coinbase of Latin America. But you can imagine that outside of the exchange and brokerage, there's so many different models, whether it's sort of like a neobank that has yield, whether it's, cross-border payments using stable coins, whether it's, things like that. So for us, I mean, I think there's an opportunity to kind of do what Rocket Internet does. I mean, you could take what kind of works in certain geographies and replicate it in geographies that, some of these, infrastructure projects haven't really been touched yet. So a lot of this revolves around CeFi, but, because DeFi, it's a little bit easier, it's a little bit more cross-border. But on CeFi type projects, whether it's, a BlockFi, whether it's, enabling like crypto-backed credit cards or e-commerce payments, or, whether it's, different types of Web3 sort of products, NFT platforms, things like that. I think they're going to be replicated in many different geographies. And so you can be an early mover there and be able to get some traction. I think there's a lot of layer ones that have really just risen up in terms of value, and they all have a lot of money right now, a lot of money to be giving to projects. So I think if you can look at what has gotten traction in Ethereum, and if you could do something better on one of these other chains, then I think that's a great way to sort of stand out, ride with a growing community, get capital, especially from the ecosystem, and be able to actually, build a better product. So that's something to think about too, is, taking what's sort of out there and improving it through building on sort of a new chain or whatnot. I think outside of that, I mean, other sorts of problems that I'm starting to see or opportunities would be gaming. I'm starting to see a lot of stuff in gaming. So if you have a gaming background, trying to tap into play to earn, I think is pretty fascinating. I think there's a lot of DAOs that are emerging. And so I think there's a lot of things that you can sort of think about in terms of DAO infrastructure that could be fairly interesting. And, outside of that, I mean, I think there's a lot of interesting use cases that that happen in finance right now, that or whatever, it could be like being able to mix NFTs and DeFi, being able to mix DeFi and traditional finance, I think is also very interesting too. So whether it's, creating tools that enable, traditional finance to get access to DeFi, traditional finance to get access to NFTs, I think that's all pretty interesting. And then I do see, actually, I see an email from, or not an email, but a message from Royce. So I can try to answer that question. I mean, I think for an early stage token project, a lot of these projects really don't have metrics. I mean, what we would do would, we take a look at whatever metrics that we can dig into. So, that would mean things like, community metrics, anything that we can find around the growth of the community, Twitter, Discord, Telegram, whatever, the content that's being produced on there, whatever sort of sentiment that we can sort of gather, take a look at like pace of development, GitHub, like whatever we can sort of track there, early signups, early customer feedback, trying out the product ourselves, understanding, what are the incumbents and how large the market is over there, and what sort of opportunity there is from sort of a returns perspective. I think those are all like certain things that we'll tap into, but it really does depend on a case by case basis.
All right, thank you. Actually, I got a question, a private question, like a person direct message me. So the question is, which blockchain company do you find the most interesting, fascinating at the moment, and why?
Let's see. I mean, I think the one that's still pretty fascinating, and I think we're going to start seeing a lot of companies, and maybe this is like one of those ideas where you kind of see what's going on and you can do it better. But I still find BitCloud pretty fascinating. And look, I mean, they did some things well. They did a lot of things probably like not very well. But I do think the fact that they were able to sort of seed a network, and a network that people are familiar with, and time the launch where it came after like all the Trump tweets and all that, so the whole censorship resistant thing is, pretty good timing for them from that perspective. And then being able to then have people, have, a token that really gets tied to their influence and potentially their commercial abilities, and then be able to have people speculate on it. And obviously, like, there's your well-known influencers that you're going to go after, but I think it incentivizes people to try to find new influencers and get people on board on those platforms. And the more engaged that you are with those influencers, and the more engaging that they can be, the more that everybody wins with their social token. And then they launched the whole NFT thing that creates a new way for creators to engage with their users, and then share profits across all those that hold their tokens, is pretty fascinating. So for those that don't know, BitCloud is a decentralized social network, or decentralized Twitter, that runs on their own blockchain, and it's called DeSo. And DeSo is now opening up for a bunch of other people to build social applications on top. But BitCloud is on a blockchain, everything is on there. It's, trying to be a bit more decentralized, censorship resistant, but it's enabling creators or influencers to basically build up a brand, distribute content, and basically share in those profits with their, users. And, users can kind of go out there and help promote, and, it creates this flywheel around an economy around your brand and influencer, and encourages people to actually uncover new brands and influencers as quickly as possible. So I still think that's a very fascinating concept that could be applied to many different use cases. Obviously, a decentralized Twitter was the first one.
Awesome. So Aaron, do you want to unmute yourself and ask the question?
Sure. Thanks for your time today. I wanted to ask you about how you mentioned earlier that there are a lot of different ideas that are successful right now, maybe in the United States, that could be replicated geographically somewhere else, perhaps on another chain. Are there any particular chains that you find interesting at the moment that you think will gain mass adoption in the way that Ethereum has?
Yeah, I do think there are some chains that are having quite a bit of momentum right now. I mean, earlier this year, I'd say Polkadot had the best momentum, and people were basically replicating a lot of DeFi on Polkadot, knowing that, again, like, there's potentially a better path to scalability, a new community. A lot of people hold DOT, so a lot of people are going to be contributing to DOT projects. And so we started to see a bunch of just like AMMs and money markets that are starting to sort of be built. And of course, even things like Moonbeam that are allowing EVM compatibility with Polkadot. I think what has been a bit more difficult for Polkadot is the Kusama and DOT parachains, where it's kind of like, while it's a fun exercise to kind of engage the community around these different projects, it may be kind of slowing down these guys actually getting out to market and things like that. It's, the crowdfunding thing seems to be a little bit of a distraction for a lot of our companies. But nevertheless, I mean, Polkadot still has a decent amount of momentum, especially around DeFi. Now, I would say, sorry, Solana, sorry, let me drink some water. Solana is starting to have a lot of momentum, especially around things that need a little bit more throughput. So I would say things like gaming, things like high frequency trading, things like potentially NFTs, though I'd say Ethereum has quite a bit of a lead on NFTs. I'd say Solana is starting to have a lot of momentum, especially around like gaming and certain aspects of DeFi. So that plus the fact that like it's gotten a pretty good brand around just consumer in general, because some of the projects that are building wallets and stuff like that for Solana have been really entrepreneurs that have really good sort of UI, UX experience and things like that. So I do feel that Solana has taken a lot of the consumer use cases, which is, one thing to sort of think about as you're building something around consumers. Outside of that, I say the other chains that are fairly interesting would be Avalanche. I think they're starting to get both into DeFi and some other Web3 use cases. And then also Luna. Luna has some pretty interesting protocols, whether it's around synthetics or whether it's around yield, that you can really sort of tap into. So I think those are the ones that are most interesting right now.
Awesome. Thank you, Paul. Yeah, actually, if you were interested to build on any of the chain that Paul mentioned, being Polkadot, Solana, or Avalanche, feel free to reach out to us, Stanford Blockchain Club. We actually have some connection with those, their BD or their ecosystem manager that can potentially help you to build there and have some support from their ecosystems. Awesome. So Brandon, you want to unmute yourself?
Thanks so much. Yeah, and thanks, Paul, for coming to speak with us today. An area sort of that I'm super interested in is the concept of renting NFTs. I'm curious sort of to hear your thoughts on that space. And a company I was looking at called ReNFT. I'm not sure if you've heard of it. They raised like a $1.5 million round recently. I would love to sort of hear if you think that could eventually become a big thing, or are NFTs just too volatile assets to serve as collateral?
Actually, we just invested into a project that is doing things around NFT lending, and I think it is pretty early. But I do feel that like there's a lot of momentum out there, and I think NFTs are just going to get larger and larger. And I think there needs to be infrastructure, whether the company that you mentioned or the company that we invested into does it, or whether they partner with others. But it is very volatile right now, and you need to be able to do valuations of these NFTs and be able to do so more in real time. So I think whether it's these companies themselves or whether it's a separate company that solves that problem, then I think we'll really start seeing NFTs and DeFi and TradFi kind of come together. But I think that's something that like, I'm sure like some of you guys might be thinking of working on too, but that's definitely one sort of like thing that this space sort of needs right now, because you're right, it is very volatile.
Cool. Thank you. Actually got a DM question regarding like your view. I think you touched a point a bit, but the question is more on your view like the international market. What do you think will happen there, and how does the crypto technology will disrupt the kind of the landscape or mass adoption there?
Yeah, I mean, internationally, I do feel that, people are probably more likely to actually need to hold and spend crypto. And so I think, I think for them, like having having things around getting access to cryptocurrency and being able to sort of get yield, I think makes a ton of sense for the emerging markets. And then I think a lot of these emerging markets just have a lot of difficulty around just paying for, or just basically just like getting into digital money. And so I feel like this is just an easier way for them to get into digital money and then be able to just like do basic payments, whether it's paying for their rent or paying for, you know, utilities, or even just like domestic peer-to-peer payments. I mean, that's kind of what we were seeing in the Philippines, where all we needed to do is just kind of get people into crypto, and they can hold crypto, or they could even just get into what was sort of a digital peso, and then make, you know, their typical payments that they definitely needed to do on a daily basis, or even just peer-to-peer payments, and sort of circumvent the banking system. I think we'll start seeing a lot of that happen in the emerging markets, and just simple use cases like that are gonna make the most sense, versus I think in like, you know, outside of, you know, that, like I think Asia and Europe, you know, sort of non-emerging markets, we'll probably see, you know, more heavy DeFi use cases and NFT use cases. You know, I think those ones will prevail a little bit more on those areas.
All right. Thank you. Tish?
Yeah, no, thanks so much for coming and speaking today, Paul. Super cool to see you guys doing really frontier stuff in the space. One question I had actually was on how you guys are like, so in your portfolio companies, a lot of crypto ones, I'm assuming they're obviously dealing with a lot of legal issues, and there's a lot of like regulation that's encumbering, and it's going to be moving pretty fast. What are some of the common legal issues you're seeing, like the most canonical legal issues you see from like both an investor's perspective and also from like the portfolio company's perspective that they have to deal with? Specifically interested to like hear what you're seeing in like the world of DeFi. I know that like lending is a big thing, compliance. Like, would love to learn about like what are the biggest legal issues you're seeing, and how are you guys handling that at Pantera?
Yeah, I think for us, like as a firm, you know, we want to make sure that we're doing things the right way. And so, you know, whether it's like our own internal policies on how we handle things with our investors, and, you know, I think that's something that every firm has to sort of deal with. And then as we evaluate companies, we want to make sure that, you know, they're doing things the right way in terms of evaluating for licenses and what they sort of need, and knowing that you know, if you're getting into a company that needs a lot of licenses, is this the right team to actually do it? You know, some guys don't want to spend most of the time like dealing with licenses and all of that, just want to like go out there and build. So I think that's also important, in addition to sort of knowing how much capital is going to need to fund this business, and if we're putting the right amount of capital into this business at this time. And then from a company perspective, the biggest thing is really like, how do we make sure that we are issuing a token the right way, so that it's not a security and that we don't get in trouble with the SEC. And so that means everything from how we structure our entities, whether it's like foreign or domestic, how we think about the use of the token itself, and when we should actually issue that token, and how we should sell the token to investors, whether it's like private sale or public sale, foreign investors, domestic investors, and, you know, when should it be, you know, how we should be getting liquidity, and in what sort of way, and how that should be distributed, airdrops or not. I mean, these are all things that they have to sort of consider. And then, of course, how decentralized does our product need to be, especially with the use of the token? So some tokens look a little bit more like securities than others, and therefore, you know, is this going to be like an FTT token, which is more of like a sort of a a perk for being on the platform. You get discounted trading fees, or, you know, it's a buy and burn model, et cetera, or whether it's actually something that functions within a product. And then, of course, you know, how much governance do we need to actually give to the community, which means how fully decentralized you want to be. So I think these are all things that folks have to think about that are particular to the use case that they have.
Awesome. Thank you, Paul. So it's already 6 p.m. So I want to respect everyone's time. Just want to know if, Paul, do you have any like last few words you want to share with the group?
Yeah, so I see some questions out here, and of course, you know, I'm sure we could just sit here for hours. There's so many things that are going on in this space, and so many questions about investing in the space in general and how things work. So in general, I mean, if you guys have, you know, any other questions, or you guys want to potentially like look for opportunities at Pantera or at our portfolio companies, or, you know, have ideas that you want to pitch, things like that, I mean, you can find me on Twitter. It's just my last name, Veradittakit. My email is just paul@panteracapital.com. We're always looking for interns. And of course, if you guys are interested in learning more about the space, I have a blog out there that has like, you know, tens of thousands of users. It's called veradittakit.com. You can just find it on my Twitter, but that's one way to get the latest on what's going on in the space.
Awesome. Yeah. Thank you, Paul. Thank you so much for coming today and sharing with us your thoughts. So I just sent like the mailing list that you can go. Feel free to subscribe to our mailing list, and I'll share the link for Discord as well, so that you can like kind of know in the future more events we have in the Stanford Blockchain Club. All right. Thank you.
Awesome. Thank you so much, everyone.
Yeah. Take care.